All right, Internet, let's talk markets. Sunglasses on, because the truth is bright, inconvenient, and occasionally meme-worthy. Earnings season is a roulette wheel with better lighting. You've got companies beating on revenue, then tripping over margins like they forgot how subtraction works. Meanwhile, geopolitical chaos mode. Russia sanctions kick oil up a few notches, so producers grin while airlines check their wallets. And yes, the US-China tension continues its long-distance relationship with your supply chains. Translation: volatility now, clarity later. Quality balance sheets and real growth beat hopium and hashtags. Tech first, because of course. Tesla. Record revenue, but margins face-planted year over year. The long arc, autonomy and energy storage, still matters. But don't buy the dip while it's still dipping. Wait for Q4 guidance to look less like a physics experiment gone wrong. IBM. Buy the dip. They beat, raised guidance, and still got side-eyed because software didn't moon hard enough. Hybrid cloud and practical AI services? Boring. And exactly the kind of boring that pays. I'll take the market's overreaction and a discount. Thanks. Netflix. Buy. A $619 million one-time tax punch doesn't change the fact that revenue grew and subs look healthy. 10% off for a temporary bruise? That's a clearance sticker for growth investors. Nokia. Buy. Optical networks, growth is humming, guidance is up, and book-to-bill is north of 1. It's an AI infrastructure pickaxe in a town full of gold rush poets. Intel, hold until the print. The stock's already been to the gym this year. The Foundry story is the whole story. Options imply a big move. If they show real traction, you can upgrade from curious observer to responsible optimist. Supermicro, sell. Guidance trimmed from $6 to $7 billion to $5 billion is not a rounding error. Yes, demand is white hot, but execution is the boss level. Great story, wrong chapter. Trim now, reassess after results. Airlines. The vibes are complicated. Demand is fine, premium seats still exist, but oil just sent them a love letter written in fire. American Airlines, buy, solid guide, free cash flow waking up, momentum pointing the right way. Keep one eye on fuel, the other on holiday demand, and try not to blink. Energy and commodities. When sanctions shove supply, prices spike. If you like simple trades, this is one. Energy ETFs or the majors for near-term upside. Refiners and airlines draw the short straws. Also, inflation risk means the Fed might keep the maybe later sign on rate cuts. Not bearish, just caffeinated. Quantum computing, aka Schrodinger's portfolio, both brilliant and broke until observed. IonQ and Rigetti, hold. The hype pops are cute, the revenues are not. Trim if you woke up rich on speculation, re-add only if the government money and meaningful tech milestones actually land. Consumer cosplay, beyond meat, sell. A 1,300% moonwalk because of a distribution headline, and a short squeeze does not fix debt, losses, or sliding sales. If you like plant-based gains, try photosynthesis. Strategy. Because you're here for a map through the laser maze. Buy opportunities. IBM, Netflix, Nokia. The market overreacted, you don't have to. Add AAL if you like momentum with a side of jet fuel risk. Avoid or trim SMCI until execution stops wobbling, BYND until numbers act like numbers. Holds Tesla and Intel for the long arcs, EV, AI, Foundry, but keep them on a short informational leash. Macro watch list. That November 1st tariff deadline is the boss fight. Hedge with VX or gold if you don't enjoy cutscenes featuring your P and L. Oil hovering around the low 60s in WTI helps energy and hurts cyclicals. If inflation keeps flirting with us, bonds may look handsome in the short run. Risk management. Less exposure to China fragile tech, more to US-centric or AI infrastructure plays. Keep your speculative toys under 5% so they don't become your personality. Bottom line, the market's a nightclub where the bouncer is macro risk, the DJ is earnings guidance, and everyone swears they're an AI company. Be picky, be liquid, and remember, courage is good, but so is a stop loss.